C-A-T-C-H-I-N-P-I-P-S. I've been C-A-T-C-H-I-N-P-I-P-S. I've been.
Hey, it's your man Charlie P. I'm tired, I'm sleepy. It's 3:40 in the morning, and looks like this angel dust trade is not going to give me an entry until New York session. So I kind of wish I would have just stayed asleep now. But let's discuss this angel dust setup and why I'm waiting to buy EJ right now. Let's take a look at the rules, and here's the first rule of angel dust. So we're going to start off on the H1 time frame, and we always trade in the direction of what side of the 144 EMA, which is my purple line, that we are on. So since we're on the top side of the 144 purple EMA here, then we're only looking to trade in a direction going up. We're wanting to buy. Rule number 2, the H1 candles must be riding the 10 EMA. I know it says EMA, but I'm just making sure you know it's a EMA. The H1 candles must be riding the 10 EMA. So as you see, the H1 candles, the 10 EMA is my white line, and the candles are just hugging that line for quite a while. They're riding along the 10 EMA, while at the same time, the Ehlers Fisher is on the opposite side of the 50 level, meaning, so we're above the purple line, we're looking to buy, we're riding along the 10 EMA, but the Ehlers Fisher, the green line down here, is on the opposite side of the 50 level. So this is under the 50. We're looking to buy, we want price to go up, but Ehlers Fisher is under the 50 level. Also, a little caveat for this rule. Actually, I'm gonna come back to that once we get done. Next, we're looking for peak center pass. So peak center pass, that's the heart of angel dust, it's PCP. So you wanna see PCP, which is basically just our way of looking for a W. W shapes are not, or a M if we were looking to sell, but we're buying, so this is a W. This one's actually a very blatantly obvious W shape, but we're just looking for a W in the market. And this is where it, where that is. But we're looking for peak center pass. So we've got the peak, here's the top of our W. It comes down, it comes up to that center point that I just drew. So we're gonna draw a line here at the top of our center point, and then, which is just gonna be at the top of this bullish candle. It comes down again, and then we need a pass candle. And it says in our rules, the pass candle has to happen, or it must be the candle that forms at one of these ranges of time. So we're in London session. That's actually going to fall between this first set of times right here. I'm just going to go off the chart time for this particular situation. Like I said, it was this one happened at 3 o'clock Eastern Standard Time. So that would equate to 10 o'clock chart time for most brokers. I know some brokers do have different chart times, but 90+% of them go off the same chart times that I have listed. So this hour candle right here, which was our pass candle, it happened at 10 o'clock chart time. So that falls within our range. And the reason it's a valid pass candle is because it's the first H1 candle that closed past our center point. So that effectively gives us peak, center, pass. Okay. So then, according to the rules, after we do that, all we're doing now is looking to enter the trade, meaning we go to the M15 time frame and enter the trade after price comes back to grab the 50 EMA. So we're going to go to M15, and all we're doing at this point is waiting for price to come down and grab our 50 EMA, the gold line. And then we're going to buy this setup on EJ. So let me actually go back to this other rule and discuss this caveat to rule number 2. So when you're looking to validate rule number 2, you want to make sure that H1 is not coming out of the bands, or that H1 isn't, OBOS is overbought or oversold. You want to make sure that H1 isn't coming out of the bands, or that it's not obos in addition to M15 coming out the bands. Let me show you an example of what I'm talking about. I found an example back on GU of what I mean here. So looking right here in this area, this would have been something that looked like an angel dust setup. We've got our peak. Here's our center point. You see the M. It's basically an M pattern. Peak, comes up, comes down to a center point, comes up, and here's our pass candle, because this is the H1 candle that closed past this center point, right? But you see how the peak is coming out of the bands right here on H1. So back to the rules, it says H1 can't be coming out of the bands. This one is breaking that rule, because H1 on the peak is already in the band, so it's coming out of the bands. We would not take this setup, because you see what happens. We got the pass candle, and when it came back on, I don't even have to go to the M15 time frame. You can see what would have happened, but I'll just go there just so we can see it's January 25th. So yeah, we on M15, if we would have entered a sell here when it came back to grab the 50 EMA, you would have been happy for like 14 pips, and then it would have came up and ate you up. You'd have lost that trade. That's what I mean when I say H1 can't be coming out of the bands. Or what was the other one? Or H1 can't be obos, meaning overbought or oversold. So let's just say the H1 wasn't coming out the bands. Like, let's say this price wasn't in the bands, and it was like sitting above the bands, something like this is. But let's say this was not in the bands, but Ehlers Fisher was still oversold in this situation, overbought or oversold. So oversold here. Even if it was oversold, you would want to go to the M15 time frame and then make sure the M15 isn't coming out the bands. That would also invalidate this setup, and you would not want to take that trade. Let me just check on the time this pass candle happened. Oh, okay. This pass candle actually happened at 12 o'clock chart time, which is also going to invalidate this trade, because that's outside of our times that the pass candle needs to form. So we've got multiple situations that tell us we don't need to take this angel dust setup right here. But that's just what I mean with that caveat of the rules. So just wanted to show you an example of that. But let's go back to EJ. This is a valid setup based on the time, since it hasn't come back and grabbed the 50 EMA on the 15-minute time frame yet. I'm not going to take this trade until New York session. So we'll just come back for New York and take it then. All right, y'all, just hitting you with a quick update. It's morning time. Price came down where I wanted it, so I'm in the trade with a total of 3 lots. This is my personal account, and the reason I'm showing my personal account today is because I'm starting off today at $854. I know I showed in a video, I don't know, the last video I posted, I was at $300 something on this account. So still building it up. I build it up, withdraw, build it up, withdraw. But somebody had this to say, and this is why I'm showing my personal account right now. Let's check this out. Look at this comment on a video where I was showing a 29K day, and this person had this to say. A 2 standard lot position, because I showed my personal account on this trade as well. Like, I showed my FTMO account and my personal account. And so they had a problem with me putting 2 standards on an $800 account, saying I have no idea what I'm doing. I've blown all my accounts. There's no way I can reliably nail pips on trades with just a few pips stop loss. Professional trading has nothing to do with over leveraging. Only gamblers do this, blah, blah, blah. So professional trading has nothing to do with it. Hello, I am not a licensed professional. So that's number one, to just like, come on, guy. 2, you might want to look through my page, look through my channel and see I'm not exactly new to this. This isn't a one-off, like I do this. This is a skill set, it's not gambling. I've seen this setup happen a million times. I know that I'm not ever going to be 100% certain where the market is going, but I'm a good 98.6% sure where it's gonna go. And it's gonna go right on up here into this zone. Because if I zoom out, that's the next place that it needs to stop. It has to visit that area. That's 120 pips up. Watch me work. Now, if your skill set isn't there yet, or you're not confident in your strategy yet, then that's okay. But don't hate on me, because I'm doing it, doing my thing over here. Let me ball out in peace. Sit back and learn something. But yeah, this trade is for you. Since I did 2 lots on an $800 account on that video, I'm throwing 3 lots on this $800 account on this one, just to prove a point. Ooh, hoo, hoo, hoo. Who's gambling? Who is gambling? That right there is skill. Skill. Learn the difference. Don't hate on me because I got skills. Let's see. We got another probably like 50 or 60 pips to hit TP. Yeah, 54 pips to hit TP. So we're going to continue to ride this out. I may exit early just because I don't like holding trades into the next day. So if we get, a little bit closer, I might just take it, because we're still, 1,500 and almost 1,600 in profit, 2,400 equity, which is essentially 300% of 300% gain for the day. So yeah, but apparently I gamble. Anyway, we'll check back when I'm about to get out of this trade. All right, y'all, I am out of patience for the day. I'm gonna go ahead and TP here at 2,900 and call it a day. I think we did a good job. I didn't feel like waiting on it to hit TP. We had another, it was in that zone, so we had another 30 some odd pips to go, and if it goes that way, awesome. I don't want to be greedy. I'm ready to just take my profits. 300% gain. Hope I did my math right with that. And yeah, holla at your boy. We'll see you on the next one.